Booms end quietly. They don't announce themselves. They slow, hesitate, then reverse. Right now, regional New Zealand is in retreat. Rents are falling, houses are sitting idle, listings pile up, and in places like Auckland, Wellington, and the provinces, the wind has gone out of the market. The data says it all. Too many homes, not enough people, investor expectations shifting from capital gains to damage control. But for those who see the map clearly, there's still room to move. Today, Westpac Chief Economist Kelly Eckhold is back with us, a friend of the show and a man who understands the real estate cycle better than anyone in the country.
Financial freedom faster. Financial freedom faster.
One quick thing before we start. Mortgage HQ Snapshot has helped thousands of Kiwis stop renting, start investing, and see the game clearly. If you want the same clarity, it's waiting in the description. Kelly, regional house prices and rents are sliding. Is this a temporary soft patch or the early stages of a broader property market correction?
So I think rents are definitely quite weak right now. And there's a lot of surveys out there saying that if you're scratching around looking for a new tenant, it's pretty tough to find one. And people are increasingly being incentivized by drops in sort of weekly rentals so that you can get somebody in. I don't think, though, that we're going to see that as a permanent feature, because if you think about it from the supply side of the market, the costs of providing rental accommodation continue to rise. So rates, local authority rates still rising, insurance still has to be paid, the CPI itself still inflating at relatively high levels, sort of like more closer to 3% than 1%. So that's all translating through to costs. And in the end, for any business and basically providing rental property as a business, you need to make the revenue equal the costs. Hence, I would expect that whilst rents are a little bit lower now, perhaps flat to sort of like falling, they'll probably start rising again in due course as that labour market picks up, and probably as net migration and population growth start to pick up again as well.
With unsold housing stock near the decade highs and listings that they are stagnant, what's driving oversupply across regional markets?
I think what has driven the increase in supply is there is a cohort of investors who are perhaps reaching retirement and need to exit some of the properties that they have. So there is a bit of a tendency for people to want to sell. I think the other thing that's happened is that because we had a big fall in house prices occur through 2022 and parts of 2023 and 2024, a lot of people held off selling in that environment because they thought there would be benefits to waiting. Well, we're 2 or 3 years down the track now, so you can only wait so long. And I think that's why there's been some reality kind of like creep into the supply side of the market. Perhaps in some jurisdictions like Auckland and Wellington, we've all received our new rating valuations as well, which provides another benchmark in terms of what our properties are worth. I'd suggest that there are probably fewer people in Auckland think that the rating valuation they received back in 2021 is still a relevant price point for them to consider if they're looking at selling a place. And I think the reason that sales have continued to remain reasonably well supported, even though prices aren't rising, is that enough sellers have recognised that if I want to sell this thing, then I need to meet the market. So the pricing has just been more realistic.
Are we seeing the end of the regional boom that followed the pandemic? And is this investor capital now shifting quietly back to the main centres?
I don't see that at the moment, actually. I mean, the regional numbers, the areas that have been strong continue to be about as strong, to be honest with you. So I don't think I see much evidence of that yet. And I think that makes sense to me because I suspect population growth and the labour markets are stronger out down there in the regions. Farmer confidence, for example, is sitting at very high levels now. And, if you look on the TV in the evenings, if the news has a farmer on, like they're sounding unnaturally optimistic in my view, because generally they tend to be a fairly pessimistic bunch. The government's investment boost policy is expected to disproportionately support the regions, because a lot of the businesses with positive cash flow now are those ones operating out there in the regional economies that are most leveraged to tourism and to agriculture. So they're the ones that might buy a tractor or a ute, or maybe put a new building up on the farm. And as a result, that's probably why you see better sentiment, I think, in those areas compared to, say, especially Wellington, possibly even Auckland to some extent.
Oh, I hope to see the farmers in New Zealand driving the Lamborghini tractor, like a friend of the show, Jeremy Clarkson. How much?
Or the BYD Ute, the Chinese cars are really taking this economy by storm right now.
Yeah, well, if there's going to be some Chinese farmers, we welcome them into it. How much pressure is the slowdown in net migration putting on rental yields, especially in places like Auckland and the Upper North Island?
I think it is a appreciable impact, particularly I think in the Auckland market, because a lot of migrants tend to find their way here to Auckland, at least initially. And one of the I think it's been a bit disappointing for our forecasts in the last few months, in that a few months ago it sort of looked like the migration picture was turning around a bit, and we were revising up our net migration figures. We saw more arrivals and sort of fewer departures. And, that is something that we would expect to be quite well correlated with things like rental demand, rents, and property market demand in general. Those trends have reversed a bit in the last few months, and you would have seen plenty of stories in the media about lots of Kiwis moving to Australia. And when we look at the arrivals data of foreigners coming in, that does look like it's slackened off as well. Generally, I think probably that labour market is not really strengthening yet.
Well, I'm looking at your regional confidence results on one of your recent surveys. Looks like they're pretty confident in the Bay of Plenty, but they're not spending their money.
Yeah, that's right. I mean, there's a lot of in the Bay of Plenty, like one of the things that's sort of, I think, impacted confidence on the upside is that it's got a strong horticultural sector exposure. And I don't know if you've looked at the price of kiwi fruit and the volume of kiwi fruit that we're selling. I mean, those are rocketing away right now. I think export volumes of kiwi fruit are at the highest level we've seen in years. Combination of great growing conditions and quite strong demand from foreign markets. So that's the reason why confidence is picking up. But I guess then there are other parts in the Bay of Plenty there where they're probably struggling in the labour market a bit. And some of the regions are not seeing quite as much tourism as the others. So I think Queenstown in particular has been a shining star in that regard, and perhaps the South Island, whereas I have heard that places like Rotorua, the Hawke's Bay, and perhaps the Bay of Plenty not seeing so much of that just now.
What specific factors are causing rents to flatline or decline, and how should landlords be adjusting their cash flow models in 2025?
Well, I think probably for 2025, the expectation is you need to keep the tenant that you've already got. Otherwise, you'll be at risk of having to basically assume a lower level of rent to get a new one. So otherwise, you'll end up with a gap in the tenancy.
Well, you're going to have a gap, right? And how long that gap is probably going to be longer, and then the amount you get is probably going to be lower.
Yeah, there's that delicate trade-off there between, well, how much of a discount do I give to get it filled quicker versus perhaps just holding out? And I think there, the quality of your property is probably quite an important determinant about just how bad that trade-off is going to be for you.
Yeah, and there's definitely a delicate balance between landlords using property managers and not. With this new healthy homes rules come in 1st of July, you can't work with a property manager illegally unless your house is up to standard, and I'm guessing some landlords are dragging their feet there.
Yeah, I believe that is exactly what's going on. I have some personal experience of that because I do rent an apartment out that I own in Wellington, and I get a lot of emails from the property manager about all of these sorts of issues.
Tourism-driven regions are showing resilience, as you mentioned, but urban centres like Wellington are really struggling. Is this divergence the new normal for investors?
I think it's cyclical, to be honest with you. I think that what we often see in New Zealand in periods where urban moves ahead of regional for a while, and then the situation reverses, and we're in that kind of like reverse stage of the cycle right now.
So Wellington's going to bounce before the end of the year, or they're going to be in this slump for a long time?
Well, when you ask an economist for a forecast, you could usually get a direction and or a time, but not both. So I would say probably if at some stage Wellington prices will bounce, I would be wary about saying exactly when that will occur.
Yeah, I mean, regional confidence survey again, your recent report, Wellington's confidence is incredibly low and they're just not spending their money.
Yeah, I mean, Wellington remains the epicenter of negativity in this economy. It's the line that I often use in presentations.
Yeah, that's where our decision makers are sitting at the moment. So hopefully that's not impacting the rest of us too negatively. How are rising compliance costs and insurance premiums compounding the pressure on landlords in an already soft rental market?
Yeah, so there's a bit of rough and smooth here, actually. I mean, I think the compliance costs remain an absolute issue. You mentioned the healthy homes issue, local authority rates continuing to rise at quite aggressive levels. Obviously, chat amongst the politicians about whether there might be the potential for a rates cap and things like that in certain parts of the country. Be interesting to see how that pans out. I suspect that may not necessarily be great news if we think about what other impacts that it might have. But on the insurance side, actually, I think things look more encouraging. Like the insurance companies are increasingly saying that they have recouped losses that they had from a couple of years ago with the bad weather. And also in some markets, I think there has been an increase in competition amongst insurers to try to get a bit of that action. So perhaps that's something that will help a bit at the margin for some investors.
And if we're talking about investors, I'd like to highlight one of your recent reports, the Industry Insight, Building Resilience in the Food and Fibre Sector. And I found it quite interesting how small of investment New Zealand is putting into the smart farming side of things. Seems like with New Zealand relying so much on the agri side of things, that we could be putting a bit more money into the technology side.
It's a big deal for the agricultural sector, which is what that report was about. But it's actually a big deal for most businesses, I think. Because like if we look about what's going on in the world right now, there's quite a lot of structural change going on in businesses with the adoption of technology and AI into business processes. That's really what's driven global share markets to record highs right now. New Zealand businesses really do need to get on the back of that bandwagon. And I've sort of warned businesses that if you kind of don't, then you'll find that your competitors up there in Asia and Europe, they will, and they'll be coming for your business in a few years because their cost base will be better because they will have made better use of technology. I mean, I think there's some pretty good news in the agri sector. When I went down to field days a month or so ago, there was a lot of focus on introducing technology to kind of like improve productivity and resiliency on farm. And there's certainly been a few good stories, I think, in the last few weeks or so ago with firms like Halter managing to kind of attract quite a decent amounts of capital to further build the New Zealand status as a leader, I think, in developing some of that sort of technology.
Appreciate your insights today, Kelly Ecole, Chief Economist, Westpac, and we'll talk again soon.
Very good.
Before we go, if you want freedom, not theory, not the mindset, if you want the moves, tactics, and a playbook, then you want the 3 Property Formula book. Now, I've written the strategy real investors use while the rest panic. Built from the trenches, no fluff, no seminars, just results. You want to own the blueprint? Grab the book and give yourself the unfair advantage 95% will never get.